Good morning. This is Jeff Cooper coming to you about an hour and a half before the open on Friday morning, January 25th. We just completed a video showing where the line in the sand in the market is based on price, time, and pattern. And in the S&P, and this was a chart we showed showing Wednesday's +1 -2 buy setup with two consecutive lower lows when the 3-day chart is pointing up, a repeat of the pattern shown on January 23rd. Now what I want to do is couple that with XLNX, which exploded after crushing earnings after the close on Wednesday night. So I usually don't like to make a binary bet on earnings. It's either all or nothing. But there was a setup that identified the potential for an explosive earnings setup in XLNX. And here are the factors that led to it. First, just like the market, XLNX had carved out a +1 -2 buy setup as well. 3-day chart is pointing up, and you immediately had two consecutive lower daily lows. So that's number one, a +1 -2 buy setup. Number two, this red line is a rising 20-day moving average. A pullback and an uptrend to a rising 20-day moving average is a holy grail buy setup. Number three, you had a pullback to a bow tie of the 50-day and 20-day moving average. So right here was this bow tie of the 50, 20-day moving average. The fourth factor that puts this setup on the radar and makes it worth the risk is this cup and handle. You have a 2-month cup and handle. Here's the cup, and here's this little 2-day handle that saw XLNX gap and go yesterday. So here's the deal. If you didn't take the risk, if you didn't want to assume the risk, the daily setup, the combination of those factors, the cup and handle, the +1 -2, the pullback to the 50 and 20-day moving averages, all suggested that it was a buy on the open. We mentioned its strength and this setup in our to subscribers in our Twitter feed. Take a look at the 10-minute. It opened at 98.25 right here, and the daily setup perpetuated a 9-point move to 107 for an opening spike high after that momentum died, and it just went sideways all day basically. So there is a time to break the rules. I don't like to play earnings, but there is a time to break the rules. But you need to have a setup in order to identify that. This is a 10-minute. That was a 15. One other interesting factor is throughout the whole decline from September, look at the strength that XLNX exhibited. It pulls back one day below its 200-day, that's this magenta line. One day, most stocks were well below their 200 days. And this was a flush out of the 200. Look what it does. The next day it gaps above it. So that was showing superior relative strength to the rest of most stocks. And you can see it's made a significantly higher low in December as the market was getting killed. So somebody somebody knew something. Somebody knew the strength, and it crushed numbers as it came out of this cup and handle. So that's it for now. Putting the pieces together, can identify when to assume the risk and either get in front of the earnings or hop on the train as it's leaving the station when the stock opens for a possible gap and go. Good luck out there today. Appreciate your time. Thanks for listening. Oh, let me say one more thing. If you found this video or the prior one regarding the line in the sand helpful, please like it, and be sure to click on the link for this video to get my free copy of my classic bestseller Hit and Run Trading and the promo involved there. That's it. I'll let you go. Bye-bye.